is burial expense or final expense insurance, and how does it work?
Typically, the final expense or burial expense coverage and terminology insures what they offer just for that purpose, for burial or the final expenses. Life insurance to individuals who are usually between the ages of 50 and 85. Every once in a while there are insurance companies that go over 85, but that's pretty rare. Burial insurance policies are what they call permanent life insurance rather than term policies. That means that these policies do not have specific time period or the term of coverage. These are permanent premiums paid throughout the life of the individual. The policy will never expire. In addition, these policies will also include what they call a cash value component that is tax deferred, like a tax deferred savings can be built up over any particular time. These funds may be withdrawn or borrowed against if the policy holder opts to do so at any particular time. It's important to note that an unpaid loan or withdrawal, which will go against the policy's death benefit if that happens. With the burial and final expense type coverage, you usually have two levels. One is what they call the level benefit, which means that the full face amount of the policy will be enforced the day the application is approved. The second one is the graded benefit. This generally has a 24-month waiting period before the full face amount of the policy is enforced. This type of policy is usually with an individual that has some health problems. If at any particular time the individual does pass within the first 24 months of that particular policy, the policy will be paid according to the amount that was paid plus 10% interest. Graded life policy plans are for those with, some type of health situation. They are guaranteed insurance plans, which usually range again from age 40 to 80, sometimes 85. And these type of policies, they don't have any health questions. They do have certain questions that are on the application. This is for someone with a serious health impairment. That is a way to go. These premiums are pretty a little bit higher than the amount, and usually the individual can't be approved with other policies because of their health. In order to qualify for the level premium benefit, the applicant can have a little bit minor impairments, but generally their health is very much up to par without any type of medications. It's very common for children of parents when they begin looking for a policy is aware that they do not want to apply for a plan where the owner of the policy as well as the beneficiary of the policy. Your parents may sign the plan but does have application for the beneficiary. The age of issue for most carriers, as again starts at 50. It usually goes to a maximum of 80 to 85 according to the carrier itself. When you start looking for these type of plans for someone theirs, you can guess that these plans start at a little bit more expensive than the other type of plans.